The Morgan Report with David Morgan.
David Morgan, themorganreport.com for the week ending 2 April 2021. Well, I'm going to start off. Stock market's doing its thing. I think the NASDAQ hit a new high. I'm going to leave it at that this week. First article up from Gary Wagner. Gary does a great job in my view. Talks about multiple indicators of reversal in gold and silver. You can read this article. It's on FX Empire. It's also on goldsilver.com. We'll go through the whole thing, showing multiple bottoms at 1680 over the last year, showing an engulfing bullish variation with using the candlesticks. Another one here with the candlesticks. And I'll just say my 2 cents that we saw silver this week hit 24. Within 2 days or 3 at the most trading days, it was back over 25. There was no trading on silver on Good Friday, and having years of experience in the futures markets, usually on these 3-day holidays, the open on Monday, whatever commodity you want to name, usually gets clobbered, usually the shorts. But we'll see. Excuse me, I said the shorts. Usually the longs get hurt. Usually the shorts have their way. That remains to be determined. Silver went under and over the 200-day moving average from what I read. I didn't look at the chart to verify it. But I think it is possible, and I'm agreeing with Gary here, that we may have seen the damage we're going to see for 2021. Certainly probably not going to rocket up. All the fundamentals on the silver side continue to get better. We're continuing to see pressure in the physical market from the silver market, meaning the commercial bar market, not to mention how crazy it's been about some of the mints, particularly the Perth mint and others, and this is spilling over into what I would say is the beginning of a movement to make people that are investing in the precious metals through pool accounts or unallocated situations to wake up, smell the coffee, and move from the unallocated or pool situation into at least allocated, if not take total physical possession of their property. And this will have an effect because there's a lot more silver and gold on paper than there ever is in the physical reality. So when you switch from unallocated to allocated, or from unallocated to physical or a pool account, and take delivery, it does put pressure on the market, even if it's coming in the retail side. Of course, obviously, it's much better on the wholesale side, meaning commercial bars. And a lot of people can't afford a commercial bar. We all understand that. So there again, what we've seen is a lot of movement out of the SLV into the PSLV. And that is one that is the most trusted for actually having physical silver without having a short against it. So now I've brought up Palisades Gold Radio. Tom does, I think, an excellent job as an interviewer. He asks great questions, but he also does some study before he does the interview. This is not about John Adams and me. That's one that Tom chose to pin up here. Yes, it's there. I won't deny it. But the one I really will put your attention on is the Happy Hawaiian right below that. This one right here, the latest one posted. It's got 14,000 views right now. So all I have to do is search YouTube for Palisades Gold Radio and look for the Happy Hawaiian. This is the gentleman that basically started the whole Reddit, I'll call extravaganza. I like big words. It started the drop that turned into a bucket that turned into water behind a dam. I mean, this is something that's gone exponential. He wrote one article on the Wall Street bets that I guess got everybody excited, and then some of the powers that be on that subreddit group kicked basically the silver people off, so it's moved to Wall Street Silver, and he has posted back on, as far as I understand it, Wall Street Bets, and I think that lasted for a while. Anyway, he wrote a very, very good summary of what the SLV is and other things, and he came up with his own and well thought out version of where silver is right now and what its potential is using an indicator he calls smoke. He explains it in this interview, and it's also available. He tells you where you can get it. You could probably just do a search on Happy Hawaiian written documents or something, probably find it. And again, I think it's something that when I'll again compliment him on what he's done, that he's motivated so many people that have not really thought about the silver market before to at least examine it, if not take action. And on top of that, coming up with this indicator that he did was well thought out, well researched, and something to contemplate. I've looked at it and thought about it, and I'm pretty well convinced he's right. And what it indicates is a large potential for silver moving forward. Another article that bring your attention to, this is from deflation.com. Higher consumer prices are here, is deflation dead? Good article. I think it's a good idea to take a look. Talks about the Suez Canal. It's a quick read, couple minutes. You can get into it and look at other things about this argument, deflation, inflation. There are countervailing forces that are taking place. The main thing to focus on, really, in my view, is the physical economy. Are we getting more goods and services? Are they more achievable? Are they more affordable? Or are we seeing less economic, physical economy, less food, less transportation, less automobile manufacture, less chips, software chips, semiconductor chips? What are we really seeing in the physical economy? I think that's the best place to stay grounded and take a good hard look to understand what's really going on. These numbers, as Bix Weir says, can be placed almost anywhere, especially with the algorithms driving the price momentum models based upon a mathematical series. That works most of the time, but not all the time, as was well proven by long-term capital management. Yes, you can predict human behavior, but you can't predict it always and everywhere. This is a very interesting one to me, where the jobs are, from CNBC, and this is for U.S. leisure and hospitality, government, construction. Now look at this construction where you're actually making something, building something, or repairing something that's already made, versus leisure and hospitality. It's almost a 3-to-1 ratio, not quite, but just about. So just hanging out and relaxing and spending money because you're on vacation or whatever has 3 times as much employment as making stuff. Manufacturing, you actually make stuff. It's about 6 times less than leisure and hospitality. Transportation, healthcare, which I thought would have been higher, is basically in the middle. Wholesalers, retails, mining and logging, financial activities, and utilities. So very interesting to me. U.S. employers hired far more workers than expected in March 2021 as the accelerating pace of COVID-19 vaccinations continue to fuel hiring in the leisure and hospitality and state and local governments. I think I've said enough there. You can draw your own conclusions. And a shout out to my friend Jeff Clark that works for goldsilver.com. Jeff and I have known each other for a long time. He's just upbeat, smart kind of a guy. I like him, but enough about Jeff. Let's get to his article. Here's how explosive and short-lived silver spikes have been. Pause, talk about myself briefly. I was asked to write an article for Futures Magazine a long time ago. Kind of an honor because they usually take really mainstream bank-type analysts or people that have really established themselves, and I was asked to write an article on silver without really being that well known. And the article was Spiked, S-P-I-K-E-D, and I talked about how silver has a propensity to spike high and to spike low. Anyway, I'm not saying that's a takeoff on my article. You can read it. But Jeff shows the length of silver spikes since 1970, and he shows you the durations of them. One thing I'll say about the 1980 spike to $50, which was a one-day event, what most people don't know or talk about is, yes, that was a one-day event. So it's, oh, silver hit 50, and I'm guilty of it. I say it often. It's true, but one day is one day. However, the other side of the coin, so to speak, is the fact that silver stayed above 20 the whole year. It averaged 20 for the entire year of 1980. And going into that year, in 1979, the silver price was 6. So what I'm conveying here is that silver was undervalued at 6, although silver was an all-time high in 1979 at $6 in January 1979. And after it hit the spike high, it retracted to 3 times the all-time high it had been earlier. In other words, it went from 6 to 18 would be 3 times it was 20. That was the average price. So silver went, we'll say it went to overvalued. I would argue it didn't, but the selling changed, and most people familiar with the story can make up their own mind whether it got overvalued or not. The fact is that it was undervalued at an all-time high of 6, and when things settled down and forced selling was caused in Silver Thursday and the last Thursday of March 1980, and all that stuff took place. When all the dust settled, silver was a little more than 3 times higher for the year. So I want you to bear that in mind, because the question I get very often is, well, will silver spike and, or will just, get to a high and stay there? And I've answered that many times. I'll say, no, I don't think it will. It could. The only reason that I know of that a commodity will go basically a spike high and continue off to the right at that high level is because industrial demand alone is so strong, and palladium is a perfect example of that. Anything that can be exchanged from a or is invested for monetary purposes, stocks, commodities, bonds, limited partnerships, real estate, or anything, you will see it usually go overvalued and come back to fair value. So let's continue this a brief moment further. So silver goes to pick a number. It's the idea. It spikes high, like Jeff's showing here, and then it settles back down. It could settle much higher than the launch point. So let me say the launch point is 50, and it goes to 250. It could settle back to maybe 150. Again, I'm using that triple, that 50 times 3 to get 150. Are those the numbers? I do not know. What I'm trying, again, to explain is, yes, we would like to sell on a spike, especially if we can play the paper game against the paper pushers and sell it synthetically in the paper markets and hold on to our physical. That would be a wonderful way to get, let's say, some justice back into the system for ourselves, speaking for myself, and then see it come down or whatever and settle out and see what the market determines as an equilibrium price for silver. So probably beat that up. We'll leave it there. Let me move on. So I'll go ahead and wrap this up. We did just issue the April edition of the Morgan Report, as you can see. And obviously this is a paid version, so I'm not going to give you a whole lot of it. But talked about the blockchain, update on the AG. I'll show you that in a second. Company updates, writing covered calls, which is a great way to make income off of your top tier companies. We did feature KL for those that know who that is or what company that is. And there was a negative write-up on 321 Gold from Bob Moriarty. Very accurate. Don't disagree with it at all. We took a little bit more objective look than Bob might take, not his. Meaning, as bad as they did on that management faux pas, that is only part of the total picture. So we do think it's probably undervalued here, but you need to read the report, or you could, or on your own, whatever, determine for yourself whether that mistake warrants getting out of it or maybe taking an opportunity here. So the gold stocks are not performing, although the earnings are really, in some cases, record earnings. So again, as I said at the beginning of this update, and Gary Wagner, I think that we are probably at the bottom. Time will tell. I'm much better at calling the tops and the bottoms, but it looks like it to me. We will find out. And lastly, I'd like to point out something that most of you know about already. Go to ag.lode.one and hit enter. You're going to get to here, which is the Lode community, birthplace of the honest money revolution, a global system built with real money, created by the people and for the people. It is a silver and gold backed cryptocurrency that I've been with from basically just past the inception. And I do have an investment, so I am biased, but I do think it's one of the better ones. There are others out there. I do think that something that's been overlooked in the crypto community is precious metals backed cryptos. Again, I'm biased, but I really believe that is a part of the crypto space that will come on fire at some point and will probably become one of the more pervasive and most used asset classes in this electronic transfer of payments that we are experiencing since basically the advent of Bitcoin. So I'll leave it there. I will be back with you next week. This is David Morgan from themorganreport.com.